Today, I'd like to talk about a company that has captured significant attention in the electric vehicle market, NIO. As one of China's leading electric vehicle manufacturers, NIO has rapidly emerged as a key player in the global EV race, competing with the likes of Tesla and other major automakers. However, the focus of my talk is not just about the company's innovative technology and expanding market presence, but also about the stock itself, particularly the potential for a short squeeze. NIO, often referred to as the Tesla of China, was founded in 2014 with a vision to produce premium electric vehicles and redefine the future of mobility. Since then, it has launched several popular models, including the ES6, ES8, and EC6, which are all SUV-style electric vehicles. More recently, NIO has expanded its lineup with the ET7 and ET5, which are sedan models that compete with luxury electric vehicles globally. China, being the world's largest automobile market and the biggest market for electric vehicles, has been pivotal in NIO's growth. The company has positioned itself not just as a car manufacturer, but as a brand that integrates technology, performance, and sustainability. NIO is also known for its unique battery swapping technology, which allows drivers to replace a depleted battery with a fully charged one in minutes, solving one of the primary concerns for EV customers: charging time. From a stock perspective, NIO's journey has been dramatic. After its initial public offering, IPO, on the New York Stock Exchange in September 2018, NIO experienced significant volatility. The stock saw massive gains in 2020, fueled by growing enthusiasm for the electric vehicle sector, which led to a dramatic increase in its stock price. In that year alone, NIO's stock surged by more than 1,000%, as investors believed the company could capitalize on the growing global push toward electric vehicles and China's commitment to a greener economy. However, the stock's performance since 2021 has been more tumultuous. While NIO continued to deliver solid sales numbers and introduce new models, external factors such as supply chain disruptions, chip shortages, and regulatory scrutiny of Chinese stocks by U.S. authorities have caused the stock to fluctuate. Despite these challenges, NIO remains a company with strong growth prospects in the electric vehicle market, particularly as China continues to invest heavily in electric vehicle infrastructure and green technology. Now let's shift our focus to the concept of short selling and the possibility of a short squeeze. Short interest refers to the percentage of a company's shares that have been borrowed by investors and sold with the expectation that the stock price will decline, allowing them to buy back the shares at a lower price and pocket the difference. High short interest is often seen as a bearish signal, indicating that many investors believe the stock price is poised to fall. As of the most recent data, NIO has been attracting attention from short sellers. The stock has seen a notable increase in short interest over the past few months. This is largely due to concerns over macroeconomic factors, such as tightening regulation on Chinese companies listed in the U.S., the ongoing global chip shortage, and competition in the electric vehicle space. Short sellers are betting that these factors will push NIO's stock lower in the near term. However, when a stock has a high short interest and its price unexpectedly rises due to positive news or market sentiment, it can lead to a phenomenon known as a short squeeze. In a short squeeze, investors who have bet against the stock are forced to cover their short positions by buying back shares, which in turn drives the stock price even higher. This creates a feedback loop where the more the price rises, the more short sellers are forced to buy, pushing the price up even further. Possibility of a short squeeze in NIO. Let's explore the possibility of a short squeeze in NIO stock. While it is difficult to predict market events with certainty, several factors could potentially trigger a short squeeze in NIO. Positive earnings or deliveries report. One of the most significant catalysts for a short squeeze could be a surprise in NIO's earnings or vehicle delivery numbers. If NIO reports better than expected deliveries or demonstrates significant progress in overcoming supply chain issues, it could cause a surge in its stock price. This would put pressure on short sellers to cover their positions, potentially triggering a short squeeze. Government support and incentives. Another possible trigger for a short squeeze is the support of the Chinese government. China has been aggressive in pushing for the adoption of electric vehicles, offering subsidies and incentives for both consumers and manufacturers. Any new or extended government programs aimed at boosting EV adoption could positively affect NIO's stock, causing short sellers to reassess their positions and possibly leading to a squeeze. Partnerships or technological breakthroughs. NIO has made strides in developing key technologies such as its battery swapping infrastructure and autonomous driving capabilities. Any announcement of a major partnership, such as with a global automaker or tech company, could be a significant positive catalyst for the stock. Additionally, breakthroughs in battery technology or advancements in autonomous driving could also drive optimism, resulting in a sharp increase in NIO's stock price and a potential short squeeze. Market sentiment and broader EV sector growth. Investor enthusiasm for the EV sector can also play a major role. If sentiment around the broader EV industry improves, driven by developments in clean energy policies or strong performance from competitors like Tesla, Rivian, or Lucid Motors, NIO could benefit from the rising tide. This sector-wide momentum could cause the stock to rise sharply, triggering a short squeeze as short sellers rush to exit their positions. Historical precedents for short squeezes. Short squeezes are not uncommon in the stock market, and we've seen several high-profile cases recently. One of the most famous examples occurred in early 2021 with GameStop. Due to a combination of high short interest and a coordinated effort by retail investors, the stock price of GameStop soared, forcing short sellers to buy back shares at increasingly higher prices. Similar events happened with stocks like AMC and Bed Bath & Beyond. While the circumstances surrounding GameStop were unique, it serves as a reminder that stocks with high short interest, like NIO, are vulnerable to such events if market conditions align. NIO has already garnered significant attention from retail investors and remains a frequently discussed stock in forums and online investment communities, which could be a factor in triggering a short squeeze. In conclusion, NIO is a company with strong long-term potential in the electric vehicle market. It faces challenges, as do all companies operating in a rapidly evolving and competitive sector, but its growth prospects remain robust, especially in China's booming EV market. For those tracking NIO stock, it's crucial to pay attention to the stock's short interest and consider the possibility of a short squeeze. While this is not guaranteed, the combination of positive catalysts, government support, or improved market sentiment could lead to a scenario where short sellers are forced to cover their positions, driving the stock price higher. As always, it's important for investors to do their due diligence and understand the risk involved. NIO stock will likely continue to experience volatility, but for those who believe in its long-term vision, the potential rewards could be significant.